Hello everyone, thank you for tuning in to EduTalk. I'm your host today, Dave. Today I'm going to talk to you about the advantage and benefit investing into the US stock market. But before that, please subscribe to my channel and activate the notification bell so that you can receive first-hand information whenever I have new videos uploaded. Alright, let's get on to the topic. Stock market is always an easy access platform for us to accumulate wealth. Well, when I say easy access, it doesn't mean that everyone putting their hard-earned money into the stock market will definitely get handsome return at the end of the day. It takes a lot of effort, discipline, and sometimes luck for you to earn money from this market. There is a saying, for every 10 people investing into the stock market, only 3% will eventually make money. So please do your due diligence before putting your money into the market. Well, technology has certainly changed the world we are living in. Not only we can buy shares with our smartphone, literally anytime, anywhere. In fact, we can even buy shares of a company listed in countries thousands miles away from us. Of course, the country that I'm referring to here is none other than the United States. The US stock market is home to some of the largest and robust companies with excellent fundamentals. These companies are going to prosper despite the uncertain futures. Well, I'm not saying that these companies will never go bankrupt, but if they really did, I'm sure we are facing probably even bigger problems like World War III, alien attacks, major climate changes, or even mass extinction. We are probably fighting for survival instead of worrying so much about our investment then. The US stock market comprises of sectors which includes technology, energy, and many others. The portfolio can be well diversified, so in the long run, investors investing in US stocks help with diversification in terms of geography, as well as the ability to invest in large companies. The scale and size of the market is unbeatable by the local stock exchanges like KYC and STI. As of January 2021, the largest stock markets are in the United States of America. It is about 55.9% of the world total market capitalization. It's followed by Japan, about 7.4%, and China, about 5.4%. And taking your current portfolio into account, an addition of US equities into your holdings will add stability without sacrificing returns. Investing in global equities will give you the opportunity to participate in the growth of global economy as well. Okay, let me share with you some of the reasons why one should invest in US stocks. First, global exposure. The Standard & Poor's 500 is an American index based on the 500 of the largest listed company and the market capitalizations. In 2019, the S&P 500 foreign sales report shows that over 29% of their revenue was made from outside the United States. About 12% of revenues were derived from Europe, Middle East, and Africa, while 9% of sales were sourced from the Asia-Pacific region. 2% of the revenues stemmed from Canada and Mexico combined. It is also interesting to know that only 2% of revenues came specifically from Greater China, which include Hong Kong and Taiwan, while Japan accounted for only 1%. A majority of listed companies in the US are foreign companies who have penetrated the US market to take advantage of the large number of investors and to be where the money is. These companies are often being traded in the form of ADR. So what is ADR? An American Depository Receipt, ADR, is a negotiable certificate issued by a US depository bank representing a specific number of shares, often one share of a foreign company's stocks. The ADR can be traded on US stock market just like any other domestic shares. While being invested in US stocks, actual exposure to the US economy is relatively low. Purchasing stocks from the US market will have you not only be invested in the American market, but also in international markets, giving you access to the whole world. Second, largest and most liquid market. Market capitalization refers to the total value of outstanding shares of a listed company which can be traded. The US is the topmost country in the world in terms of market capitalization, as can be clearly seen in the given graph. The combined market cap of NYSE plus Nasdaq reaches a whopping 45% or 40 trillion in 2020. It is 7.5 times of Japan's stock exchange and more than 3 times of the Greater China stock exchanges as well. The US market is also one of the world's most liquid markets, with nearly 4.3 trillion worth of trades going through the US stock exchanges in 2020. China moving up closely with US 3.1 trillion. So the advantage of investing in a gigantic, advanced and very liquidable market like US will ensure share price movement in long run. However, the flip side of it, is the share price can move downward as well. So you need to be very careful in choosing the right company to invest. Third, currency exposure. When one invests in global stocks, they are exposed heavily to currency exchange rate fluctuations, and one must take precautions while investing in equities with volatile and unstable currency. In the last decade, the Malaysian ringgit has depreciated approximately 20% against the US dollar. By taking this into consideration, we can see how an investor who has invested in US stocks will have seen the return boosted by the depreciating RM over the years. This is on top of the potential capital gain derived from your portfolio. And Malaysia's economy in comparison to the US is more likely to remain a highly inflated economy, keeping the trend unchanged. So diversification and long-term positioning will keep investors in the green and help them benefit from currency depreciation. Fourth, FANG. Simply put, the acronym FANG represents 5 stocks, which are Facebook, Amazon, Apple, Netflix, and Google. Traded on the Nasdaq, investors turn to technology companies when they are looking to invest in growth stocks, and a large amount of media attention and investors' portfolio are concentrated around FANG. These companies have changed the way we live and have reshaped the world, whether it comes to how we purchase goods and services, how we watch movies and play video games, and even communicate with our family and friends. And FANG shareholders have no doubt been well rewarded. The members of FANG are so massive and profitable that they generate more than a significant amount of gross domestic products in the US. They currently have a market capitalization of around $6.1 trillion, and they make up over 18% of the total value of the S&P 500. If an investor had bought 1,000 worth of stock in each of the FANG companies in 2010 and 2012, in the case of Facebook, because that's when the IPO was launched, then the person investment would be worth $61,142 today. The same investment would be only worth $14,975 if it had been invested in the S&P index fund. Anyway, this is not a buy and sell recommendation of the FANG stock. Please do your due diligence before investing. And 5. Performance. The FTSE Bursa Malaysia KLCI, also known as the FBM KLCI, is a major stock market index which tracks the performance of 30 largest companies by full market capitalization listed on the main board of the Bursa Malaysia. On 4th April 2011, the index was at 1,549 points, and 10 years later on 31st March 2021, it was at 1,573 points. So if you have invested 1,000 into the Malaysian index fund, there's hardly any gain for the past 10 years. The Straits Times Index STI is a major stock market index which tracks the performance of the top 30 companies listed on the Singapore Exchange. It is a capitalization weighted index. On 4th April 2011, STI was at 3,238 points, and 10 years later on 31st March 2021, it drops to 3,165 points, and similar to KLCI, there's hardly any gain in the past 10 years. American Stock Market Index represents the market capitalization of the top 500 companies listed on the Nasdaq and the NYSE. The measure is most popularly used by finance professionals and media. It effectively represents the US economy and the many industries. On 4th April 2011, it was at 1,325 points, and 10 years later on 31st March 2021, it was at 3,976 points. So if you have invested 1,000 into the US index fund 10 years ago, today it will be valued at $3,000, a handsome 200% return, or a CAGR of 11.6% for the past 10 years. Despite the recent rally, there are still a lot of opportunities in the US market, and analysis shows that the time has come to consider this market to diversify your asset outside the country as well. The US is an economic superpower, and its innovative nature offers a competitive edge to its investors. All the factors I mentioned above make US a highly lucrative market. No doubt, there's a lot of opportunity in share investment, but I need to emphasize that not everyone is suitable to invest in stock market, especially if you are weak in financial knowledge and emotional control. Please do not borrow money to invest, as this is often the first step of self-destruction, and please do your own risk assessment before embarking on this journey. Else, you can engage a financial advisor or wealth planner for professional advice. Well, I guess there's enough reason for now, for you to considering investing into US stock market. Again, please do your due diligence before putting your money in. In my next video, I'll probably talk about how you can invest in the US stock market for Malaysia and Singapore with hassle-free. That's all for now, peeps. Thanks for following through this video until this stage. Please like and share this video to your friends if you think it makes sense. And please remember to subscribe to my channel and activate the notification bell if you have not done so. I will see you again in my next video. Bye.